Once upon a time, the year was 2016 and the future was looking bright. Bitcoin had proven that a decentralized digital currency can work, but that was just the beginning. A new frontier beckoned. The question was, who's up for the challenge? Then came the answer: Ethereum, a network that would allow anyone to build anything. Developers flocked to this new canvas, creating decentralized applications that offered financial services, digital art galleries, prediction markets, and more. It was an exhilarating time, a chance to prove that decentralization can scale. But like any ambitious startup, Ethereum wasn't without risk. And on June 17th of that year, those risks would collide with catastrophic results. Today we'll unpack the origins of this whole mess, the hack itself, and most importantly, what we can learn from it. This is the story of the first big hack in cryptocurrency history. The year is 2016 and Ethereum is gaining steam. At that point, it was still relatively new, but early developers were already pushing the limits. Then out of the blue, something appeared on the horizon. A groundbreaking initiative unlike anything seen before. The idea was simple yet profound. A fully decentralized investment fund. No managers, no banks, no middlemen, just the collective wisdom of the crowd. Investors would pool their resources together, governed entirely by smart contracts. All decisions would be made transparently and automatically based on rules set in code. The name was the DAO, which stands for Decentralized Autonomous Organization, and in many ways it embodied the hopes and dreams of the entire Ethereum community. With that in mind, the team behind the project didn't hold back. They went all in on marketing, even hiring an advertising agency to promote it. But if they thought that would generate interest, boy did it ever. At its peak, the DAO's crowdfunding campaign raised over $150 million. That's equivalent to nearly $200 million today. In fact, at the time, it was the largest crowdfunding project in history. Now that's quite the achievement, but it also carried a fair share of risks. After all, never before had so many people put so much money into such an untested experiment. But hey, that's the risk you take when you push the envelope. So did it pay off? Well, that's where things get interesting, because while the launch was successful, the long-term prospects were precarious. You see, the code that governed the DAO had a flaw, a small yet critical vulnerability. And believe it or not, it only took one person to find it and exploit it for everything it was worth. Here's how it worked. Basically, there was a way to trigger a process called a recursive call that essentially allowed you to repeat a function within another function infinitely. And in the case of the DAO, it was possible to use this recursion to siphon off funds. Now, I know that sounds a bit technical, but don't worry, we're going to break it down in simpler terms. Imagine a bank account with a special feature. Normally, you can withdraw money like any other bank account, but once per day, you can initiate a super withdrawal. This one has no limit. The trouble is, after initiating the super withdrawal, you have 1 hour to confirm it with your biometric data. If you do, the transfer goes through. Otherwise, it reverts, and your regular withdrawal goes through instead. But what happens if you fake your biometric data and confirm the super withdrawal with a fake thumbprint? Well, the bank won't know about it until the next day when they try to reverse the transaction and find that it's gone. That's bad news. Well, now imagine thousands of accounts doing this every day, each with their own super withdrawal. That means millions of dollars disappear daily. There's no way to get them back. That's exactly what happened at the DAO. On June 17, 2016, a hacker discovered the flaw and started exploiting it. Instead of making one withdrawal, they triggered the same command repeatedly, each time siphoning millions of dollars out of the DAO and into their own wallet. To make matters worse, reversing this exploit wasn't straightforward. It would require changing the very structure of the blockchain itself. The question was, should they do it? In other words, should they undo the hack or let it stand? To answer it, Ethereum held a meeting with the community, summoning all stakeholders to deliberate and make a decision. The pressure was intense. The amount of Ether stolen was massive, about a third of the total funds. Also at stake was the reputation of the entire crypto industry. If Ethereum didn't act, the narrative would shift from decentralized finance to decentralized scams. So what was the solution? Well, they had two options. Option 1 was to do nothing. Technically speaking, this was the best option. After all, the blockchain shouldn't be tampered with. Doing so could compromise the entire system, not to mention it could encourage further attacks. The thinking was, why should other hackers follow the rules if Ethereum intervened every time? Plus, doing nothing would send a message to the crypto world. This was the nature of the beast. No system was safe, not even Ethereum. Option 2 was to reverse the hack, essentially rewriting history to undo the theft. This option was championed by Vitalik Buterin, who was a leading figure in Ethereum at the time. Personally, he felt responsible since he was one of the early contributors to Ethereum. He wanted to do right by the investors. Moreover, he believed that such an attack could happen again. If the Ethereum community didn't act, it would only get worse. Ultimately, the community chose to do both. They decided to fork Ethereum into two separate chains, one that reversed the hack and returned the stolen funds and the other that left the hack intact. The result was a permanent split. One path chose justice, rewriting history to return stolen funds. The other chose purity, leaving the hack untouched. From that day forward, there were two blockchains, ETH and ETC. The community was forever divided, and that's a lot to unpack. So let's summarize the key takeaways. Firstly, the DAO experiment pushed the boundaries of what was possible with blockchain technology. It showed that decentralization can scale, but also highlighted the risks involved. Secondly, the hack itself exposed a major security vulnerability in smart contracts. Thirdly, the hard fork demonstrated the importance of governance and consensus within the crypto space. Finally, the aftermath revealed the deep ethical questions around reversing transactions. At the end of the day, the DAO hack was a defining moment in crypto history. It was a wake-up call for the entire industry. Since then, security has been front and center. New protocols are built with security in mind, and governance plays a bigger role than ever. But here's the thing. Despite all the lessons learned, the scars remain. Every time Ethereum processes a transaction, it's a constant reminder of the past. Some argue that this is a good thing. The scars are a badge of honor, a testament to resilience. Others wish it could be forgotten. After all, it still casts a shadow over the network. So what's the solution? Well, some hope that it will fade with time. As Ethereum continues to evolve, the hack will become less significant. Others call for a complete rewrite of the early history. This would erase the hack from existence, but it comes with its own set of challenges. One thing is for sure, the debate is unlikely to end soon. Just like the fork itself, the scars of the past continue to shape the future of Ethereum. The DAO hack wasn't just a technical event. It was a collision between ambition and vulnerability, between innovation and security. Ultimately, it's a story about pushing the envelope and the consequences that follow. Since then, Ethereum has grown tremendously, but it hasn't become complacent. It continues to adapt, whether through upgrades or hard forks. And that's the true story of Ethereum. Yes, it survived its first great test, but it wouldn't be the last. To understand the future, we must learn from these moments. This is DCA Crypto. We bring you the stories that shape the world of crypto, because understanding the past can help us navigate the future. Subscribe for more.